Hello, everyone, and welcome to this special edition of Business Incorporated. We welcome our viewers here in Nigeria and around the world. I am Boston Amofai. I'm sitting in today for Chimeze Obiwago. Let's get the program started. Of course, a very big day for Nigeria's Central Bank Monetary Policy Committee decision-making within the next hour and a half. We have a panel of analysts sitting down here at our global headquarters, also at the Nigerian Stock Exchange, as well as at our Abuja studios. So you will need to join the conversation. Meantime, President Trump, the U.S. president, softened his stance a little bit about the trade war with China. Well, a little bit more about the Huawei problem. And that is because a few footwear makers in the U.S. are asking Mr. President to tread a little bit softly. And of course, Tesco has something in the news for us when we touch with the London studios a little bit on the program. So the pan-European stock 600 edged about 0.3% higher in today's trade. That's with the technology stocks leading gains with 1% rise. But quite a bit more to talk about the trade war between Washington and Beijing. Monday saw markets close lower after U.S. crackdown on the Chinese communications giant Huawei, weighing on the technology stocks. So let's talk to Lars Halter, the Frankfurt Stock Exchange, our DWTV Channels TV correspondent there from the trading floor. Give us a bit more of the European trading day for today. Lars, welcome to the program.
Thank you.
Okay, great. So let's start with the President Trump looks like he's softening his stance a little bit on Huawei and others, saying, well, it's given a 90-day moratorium, as you want to put it. What does this say about Mr. President's economic policy?
Well, what it does tell us about his policies is, and we've heard that before, we talked about this before, of course, that he sometimes just goes with intuition and with not really smart decision-making. He is taking one step without thinking what the next step might be. And in this particular case, that is obviously what we have seen here. We have seen him starting a fight with Huawei, not realizing that it's going to cost his own tech businesses a lot of money, namely, of course, Google, but also some of the chip makers, Intel or Xilinx. And it looks a little bit like he might have heard from them. They came to an understanding that at least we're going to have that 90-day reprieve now and figure things out in the meantime. It also, of course, tells us about his economic policy and the way President Trump works, that he is still playing hardball. He is not one to play games with. He is attacking. If he can't attack the company, he attacks the country, then he attacks one of their biggest players, one of the biggest companies, and sees what he gets. So he clearly, of course, takes Huawei here to get China back to the negotiating table and see what deal he gets.
But let's talk a little bit and talk about Tesla. This company is beginning to look like one week, one trouble. So what trouble is Tesla in at the moment? What's the latest?
Well, Tesla is right now, or what it seems like, in the biggest trouble it's ever been in. The company is literally running out of money. And Elon Musk has written a letter to all his employees saying that he's going to put all expenses from now on under extreme scrutiny. And he specifically says whether that is cost for parts or rent or travel expenses, he is looking at every penny that is leaving the house. The thing is, Elon Musk says, Tesla has to be profitable on a quarterly basis within the next 9 months, or they literally run out of money. And of course, that is a very, very bad sign for investors who have patiently been waiting for years on Tesla to become profitable. The question has always been with that definitely interesting company with great ideas. Can they ever produce enough cars to make this a profitable enterprise? Can they really ever mass produce on a scale that is necessary? And if you look at shares as of late, Tesla shares have lost almost half in the last 6 months. Investors seem to say they can't.
Interesting. Lars Halter, thank you so much. We have a very big day with our central bank monetary policy rate decisions today. Thank you so much. We've got to take this a little bit short today. Thank you so much. We appreciate that. So let's talk about the UK market. It's been a very strong political discussions jostlings by ministers to get Prime Minister Theresa May's position. Tesco is one big company in the news in the UK saying he's selling his mortgage portfolio units, the banking business arm. That's one big story today. As we continue to see the earnings season in the UK market, WH Smith reporting 15% upbeat in sales for first quarter, but says the Chief Executive Officer, Larkin, will be leaving office sometime before the end of the year, September, around the end of third quarter. That's some of the big stories from the UK market today. But of course, the big story from Nigeria is, of course, the Central Bank Monetary Policy Committee meeting. Within the day, we've seen some comments from the Nigerian Stock Exchange and MTN regarding, of course, the listing of that telco giant on our market last Thursday. A number of concerns about the free float liquidity valuation and all of that around this telco giant. The Nigerian Stock Exchange has provided some clarification. Then the telco company also issued a two-page statement saying all things are in order, explaining what to do with the, or how the company intends to pay back the 325 billion naira and the new fresh 200 billion that they are taking under its medium-term financing program, which he says will be used to expand the business operations. But let's check with the London, with our studios in downtown London within the programming. But first, let's give you, let's introduce or unveil our panel for today, talking about the Central Bank of Nigeria's Monetary Policy Committee meeting, the third in the new year. The last meeting was on the 26th of March. All eyes on Godwin Emefiele. He's the one, of course, he secured a second term in office, so he will be pretty more comfortable to today's meeting. Let's bring you the panel introduced at the global headquarters here of Channels Television, Oise Ajayi, who is a senior banking analyst and the fixed income strategist at Meristem Securities. Oise, it's good to see you. Thanks for coming.
Thank you.
Thank you very much. And of course, we have also sitting here the president of the Manufacturers Association of Nigeria. Let's get him also on the program, and that's the Segun Ajayi Kadre. Thank you so much for coming.
Thank you very much. I'm the Director General.
The Director General, beg your pardon.
Yes,
I look at the president. There's a president of man, and that's the Director General. And that's the man who runs the administrative part of the whole organization called MAN. Okay, let's start checking with our Abuja studios, where Professor Uche Uwaleke, who is Chief Economist at the Securities and Exchange Commission and the Professor for Capital Markets, is also live to us on this particular CBA, Central Bank of Nigeria Monetary Policy Committee decision day. Professor Uwaleke, good afternoon. Professor Uwaleke is joining the conversation as well. Of course, from the Nigerian Stock Exchange. The gentleman there with us is Victor Chiazo, who is the head of research at FSL Securities. He's bringing us some perspectives from the market street on this Central Bank Monetary Policy Committee decision day. Gentlemen, thank you very much. We appreciate your coming. Let's have the first word, introductions, as it were. And I think there's no better way to start from the two economic reports that we have on our hands. So let's start with also about the first quarter GDP numbers that we had 24 hours ago. I'm sure we all agreed it's going to be a major talking point for the MPC members.
Yeah, it's going to be a major concern for the committee. Growth is key, is essential, and then that is going to factor into their decisions significantly. I know we're up 2.01% compared to last year, but quarter on quarter it was a decline. They would really consider that, and that's going to weigh heavy on their decision.
Director General, Segun, what do you think?
Well, I think I share the same views. All of us, especially those of us operating in the manufacturing space, are looking forward to a more revival-oriented approach from the CBN. We are consciously looking at what the NBS has said about the performance of the sector. It is worrisome, and so we expect that the CBN will be mindful of this and therefore take measures that will favor the manufacturing sector, especially in their access to credit.
On March 26th, the MPC decided to give 0.5% haircut to a policy rate to 13.5%. So I'm sure that was a welcome development in March. So what's your outlook for today? You want another haircut?
Absolutely. I mean, it's salutary that a haircut. I mean, and we have always said that for the manufacturing sector, you needed to be able to give single-digit interest rate. Otherwise, you are not helping him. As a matter of fact, we have said it should be 5% because we compete with economies that have 2%, 3%. We compete with them in Oyinbo. We compete with them in Ilupeju. Those products come from environments where it will be unheard of to talk of double-digit interest rate. And that's why we are saying whatever needs to be done through special windows, the manufacturing sector has to be singled out and given credit along those rates.
Also, I'm not sure, you sure we can do another haircut with this GDP and inflation?
I don't
inflation
think so.
at 11.37. Yes, 37%.
Yeah, I don't see
sure
another,
we can afford that today?
I don't see another haircut. In fact, the last haircut wasn't expected by analysts. It came as a shock to almost everyone in the market. And then at this point, I don't think we're going to see another haircut. I mean, we're just coming from a period of a haircut. You know, I don't think the committee would be friendly to this decision to take another haircut, especially with some inflationary pressures high up there, and then of course with a slower GDP growth than expected. So I think they're going to adopt a wait and watch stance.
Is it likely a rate hike?
No, I don't see a rate hike.
I don't want to put it to the Director General. I'm sure I know his answer is going to be a no. He's looking at single digit, 5-7%.
Yeah, you see, single digit. Currently, only the agri sector has policies that are encouraging there's only policies that are only encouraging single digit to the agri sector, and then we've seen the CBN try to encourage banks, create avenues which single digit loans go to this sector, and then the banks get to access a lower CRR. But for any other sector, it's still very dicey at this point, largely because there have been several calls, to boost agriculture, and then everyone seems to be of the opinion that agriculture is the next best thing, and then it's going to boost our economy. Everyone wants to go back to that time before oil. So manufacturing getting that, maybe not. So single digit stretch.
Director General of Mine, your sector, manufacturing, was a very sluggish 0.81% in the first quarter. Much lower than 2.35% in the last quarter of 2018, and of course, it was smaller than the first 1.92% in third quarter of last year. So, what exactly is happening in your sector?
Well, it is depressing, actually, to learn, and it's just confirmed what we have always said. Just 2 weeks ago, we came out with the manufacturer CEO confidence index that indicated that the sector was struggling at 51.3 points, which is an indication that the sector is under siege, if I may use the word. And we saw all this coming. We listed the challenges that confront the manufacturing sector and advised strongly that actions be taken, which includes the interest rates we've just spoken about. There has to be a special window. If you give it to the agricultural sector, and you do not pass it on to the manufacturing sector, who is going to take those products from the agri sector? Agribusiness is the thing.
I'd like to know if the real problem of the manufacturing sector is all about interest rate. If you have a single-digit interest rate, would you still be able to perform and grow manufacturing very optimally? But let's stand by, everyone. Take a very quick break here on Business Incorporated. We're right back in 2. Welcome back, everyone. A very special edition of Business Incorporated. A very big day for Nigeria's interest rate decision by the Monetary Policy Committee, the third meeting in the year, the second meeting in March 26 to be precise. The Central Bank Policy Body or Committee decided to cut interest rate by 50 basis points. So some analysts are saying, look, we're done with that. It looks like there's going to be a pause to this accommodative stance. Of course, no thanks to the latest inflation and the first quarter GDP numbers. Our panelists here on the channel today to take us through to 3 o'clock this afternoon after the governor of the central bank, Godwin Emefiele, would have read his communique, and then we try to unpack what's in that communique as always for you. So let me just reintroduce our members in case you're just joining us. Oise Ajayi, who is a senior banking analyst with Meristem Securities, is also fixed income strategist. Oise, thank you so much. And of course, the Director General of the Manufacturers Association of Nigeria, who is also himself an industrialist, Segun Ajayi Kadru. Thank you so much. We appreciate both of you being here at our global headquarters. Then, of course, from our Abuja studios, Professor Uche Waleke, Professor of Capital Markets, Chief Economist at the SEC, and the current chairman of the Chartered Institute of Bankers of Nigeria in Abuja there. Thank you, Professor. It's good to have you join the conversation. So the main question, as you're just coming through, Professor Waleke, on this is that, do you think the accommodative stance of the monetary policy that was offered, the olive branch, as it were, which was offered on March 26th, is now, that window is closed or will be closed today?
Well, thank you, Boston, and a very good day to you and the folks with you in the studio there. I think it's going to be halted temporarily. My prediction today is that it's going to be a hold, decision. Of course, the MPC decision is usually based on a global and local, developments. And since March, I have not seen any major shift in those developments that informed the March decision. MPC is likely going to point to the Federal Reserve's monetary policy, normalization policy, which is slowing down. MPC will also be referring to the U.S.-China tension, trade tension, as well as the uncertainties surrounding Brexit. Of course, Brexit has been shifted to October 31st. They will also be pointing to geopolitical tensions. That's on the global scene. And of course, on the domestic scene, there is the issue of the GDP growth rate, which came in at 2.01%. Of course, we know it's a lot better than what we saw in the first quarter of 2018, even though it's less than what was recorded in the last quarter of 2018. That's at 2.38%. MPC will also be noting, of course, the stability in exchange rate, the fact that some financial indicators, financial soundness indicators for financial institutions, have also been, improving. Talking about the capital adequacy ratio of banks, as well as the the NPLs of banks. But more importantly, too, MPC will be referring to the spike we noticed in the inflation rate from 11.25% in March to 11.37%. But as I said, the spike in the inflation rate, for me, is not a justification for trying to toy with the idea of returning to 14%. And of course, that's because, number one, there's no empirical evidence to suggest that that spike is what has led to, the reduction in the MPR by 50 basis points in March is what has led to the increase in inflation rate. And again, we should also understand that as far as monetary policies are concerned, if you look at historical developments around countries, it is usually the core inflation that counts, because that one is more or less stable. The food index, because of its volatility, because of its seasonal nature, is not usually used as a basis for taking monetary policy decisions. And of course, we know that in this country today, the core index has been stable and even at single digits. Even in the last inflation figure released by the MBS, the core inflation actually fell, from 9.5 to 9.3. It was the food index where the pressure came more, rising from 13.45 to 13.7. So for me, it's not a justification to try to be hawkish about the decision today. So I see them holding it. And it's also important I point out this, that
Prof, just a
the
second.
position of a majority of the members of MPC, starting from March,
Professor, just a second. We will have a bit more time.
It's in monetary policy.
Yes, we have a lot to unpack here, but looking at with the key economic data that we have on our hands, recently with inflation and GDP, just a second, Professor Uche Uwaleke from Abuja Studios, let me put this through to our guest here at the headquarters in Lagos. Also, do you think that the inflation and the GDP are strong enough for the central bank MPC to say, look, we're holding rates, but what did we do with the 0.5% that we got in March? Do you think it has fizzled out, or is still there in the system?
I think, like I said,
somehow?
It's going to be a wait-and-see approach, because the 0.5% cut is obviously not going to bring in a change immediately. It's been, what, 2 months since the cut, and then we have GDP coming in slower, we have inflation on the upswing. But like the professor said, the inflation was driven by food inflation, which is largely volatile. So you really can't judge based on that factor. So I think right now it's going to be a wait-and-see approach. Give it a bit more time to see the actual, impact of this rate cut. Although we expect that it wouldn't be a significant, impact. I mean, it's 0.5 basis points, but we expect that, wait and see, and then make a contrary decision if need be.
Thank you. Before we wrap this up for Business Incorporated, let's touch base with our studios at the Nigerian Stock Exchange. Victor Chiazo, who is the head of research at FSL Securities. Victor, good afternoon. Welcome to the program.
Yeah, Boston, nice to be here.
Thank you so much. What's your take today? Is there going to be a pause to the accommodative stance of March 26? Do you see a cut? Do you see a hold? Or you see a hike?
Yeah, Boston, I like the initial conversation you guys had in the studio around dropping rates, maintaining status quo. But I think what we witnessed in March, where we saw rates drop, I think that came as a surprise to most analysts. And the truth is, we need to decide and tell ourselves what exactly do we want going forward. If you recall, in November 2015, the CBN governor, Semi Emefiele, came and dropped rates from 13% to 11%, clearly indicates showing the market that he's actually a pro-single-digit interest rates fund. So there's nobody that's going to say, aware that Emefiele actually wants the market to enjoy single interest rates. But unfortunately, come 2016 March, there was a reversal in that trend. We saw interest rate go back from 11 to 12%. And in July, we saw a 200 basis point increase from 12 to 14. We all know what was the situation of things then, while the interest rate could not stay at 11% for more than 4 months. But coming to 2019, this is a different scenario. Oil prices are stable, reserves are decent. We've seen a 50 basis point drop in the last MPC meeting in March. I think for now, the thing is we need to take the bull by the horn.
Okay, so taking the bull by the horn.
Do you think we'll get a better chance to drop rates?
Victor, if we are taking the bull by the horn, in just 1 second,
yes.
What is that? How do we hold that bull? Hold the bull to stop, lift it up, or press it down? So what do we do? Hold, cut, or hike?
The truth is that we need. I think we need to cut.
We need to cut. Okay. Thank you so much, everyone. Victor Chiazo, stand by, everyone. We'll have a more robust conversation. All this conversation is just coming just a week before President Buhari himself gets his second term in office. Of course, he confirmed Godwin Emefiele for a second term. So whatever happens today is going to be the monetary policy decisions for President Buhari's second term in office starting May the 29th. That's all on Business Incorporated. We thank you for watching our regular programming for this special day after the break.